Today I want to be talking about how to be able to identify order blocks, how to be able to master it within inside this market. Be able to master the SMC, supply and demand. When I talk about order blocks, I mean supply and demand, specifically smart money concepts, because that is what I trade. So now, in order to be able to in order to be able to identify order blocks, you've got to be able to know what order blocks are, why they occur. Otherwise, you'll be left in thought, you know. So, in order to be able to understand what supply and demand is, order blocks, let's we have a clear thing right here. Order blocks are footprints left by institutions which carry large orders which we can spot out inside the market. Due to the sheer size, some cases, some cases, not all orders will be Due to the sheer size, some cases, not all orders will be able to be filled, which may cause that level slash price to be an area of interest for banks, institutions, large hedge funds to return to that level and carry out and fill more orders. This is a basic, simple understanding. What I want to do as giving you value is make this topic, make all the videos as simplistic as some individuals, some people, they want to be able to just throw around big words and things to make more confusing in order for them to be able to look more smart. What I really want to do is be able to provide as much value and maybe make sure you understand it in the clearest, simplest way possible for you to be able to go on and teach other people and spread value and spread more knowledge as I want to be able to be doing. Okay, next. This is reason why the market may drift towards that supply and demand. Once the market create the supply and demand, institutions, these banks, hedge funds create the supply and demand, that order block. This is one reason in order to mitigate losses. In order to mitigate loss, because when the as maybe manipulate market, as maybe when the market is manipulated, which force them to open up the opposite to what they once wanted, in order to get liquidity in the market to open up to the desired position. For example, an institution wants to open sales, however cannot due to not being able to sell, due to no one buying, therefore creating buying opportunities for retail traders, support and resistance to use that liquidity to fund the orders. This is known as stop hunting. Okay, to be able to give you a tangible asset, and what I mean by manipulating the market to create the opposite of what they want to do in order to be able to use that liquidity, to be able to fund their own orders. Okay, for example, you have an Apple phone. In order for you to be able to sell the Apple phone, someone must buy it from you. Otherwise, that transaction cannot occur. Same way within this market. In order for be able to open up and buy orders, these institutions, they have to be able to sell it to individuals. Okay, sometimes there's not enough liquidity. So what they do is known as stop hunt. They manipulate and probe the market, creating opportunities in the eyes of retail traders such as support and resistance. Once they do that and potentially selling, they create buying opportunities, trend lines, as well as equal highs, and potentially push market beyond that point where this is where individuals start selling or buying. And for example, in this case, the institution wants to sell, so they'll create buying opportunities, so they'll create that equal high, push past them. Now individuals start buying, however, and push past that, and they'll open orders, they push past. Now in retail traders are looking to say buy. However, they use that liquidity in order to sell. However, their orders from pushing past them things are still in drawdown because they had to buy in order to sell. Therefore, they bought up to be able to instigate retail buying. Then they sold. However, the positions are still open, so you have to return to be able to put the initial buys to mitigate them and to break them out at even, so they don't get a loss, because they trade large size. I'm talking hundreds of $1 million every single day. So they have to be able to return and mitigate that loss that may be costing a lot of money. The next one is to return to that level to fill more orders. That level potentially may have resting liquidity that potentially market may need to be able to go towards and then fill more orders. That one's pretty simple. And to fill imbalances happen when imbalances create in the market must come up and fill them. This therefore tells us that potentially an order block which has major imbalance market may come up, fill that imbalance, correct that imbalance, tap into our order block, and then carry on the initial reaction, the initial move. Okay, now we understand now why market may drift towards that supply or demand. What are order blocks? How to be able to understand what are they, the basic foundation and simplistic they are. Now we've got to be able to understand what makes an order block valid, what makes an order block invalid, and what makes it more high probability. Now valid, it must break structure. It must. There's no break structure. That's one of our key rules it must break structure. That's one of our key rules when it comes to be able to trade in order blocks. It must break structure. The next one would be it engulfing candle followed by major pressure. Example, when the market leaves that level, it has a big volume of one order block which increases the validity of our order block. The next one is high probability, as well as major pressure potentially. Major pressure potentially be able to and maybe potential major pressure potentially shows that potentially not all orders were filled, and therefore potentially come up and fill more orders. Next one is high probability. High probability ones makes all order blocks more high probability. They're not essential in order to be able to take the trade. However, it is an order block. It's an order block which makes high probability, which increases your confidence within that trade. The next there would be imbalance. Imbalance needs to be filled. Imbalance is one that increases the validity. The next one is a major high probability one, a premium level. The way I trade, there's 3 premium levels: 0.79, there's 0.62, and the 0.5. In the Fibonacci retracements, this increases the validity. Why? Because premium levels are levels which price is the best. When price is the best, these institutions get a better price for what they better price, and therefore use that and get a better price. And these individuals like to have better prices for when they want to be able to do the initial, they want to be able to use that premium price to be able to fund their desires. The next one would be liquidity inducement order block. Liquidity inducement order block is the highest probability setup in SMC. It is when inducements are done. This is when when I just talked about how market had to push past, stop hunting market had to push past these retail buying to be able to use their liquidity to sell. Their orders are still in drawdown. That's why that order block is the level in which they have to return to in order to mitigate that loss and in order to put it back at break even, so they don't have any losses of hundreds or millions of dollars. The next one would be invalid. What makes an order block makes invalid? It didn't break structure. An order block that didn't break structure has no relevance within our eyes. If we actually completely block it, we wait for confirmation that gives us an order block break of structure. If it doesn't take up, if there's no order block, we do not take. And the next one is very choppy price action. Price action with major wicks, not clean price action, no clarity. The next one is potentially a smart money trap. This is when there's more of a higher probable setup. When that is, if you want to be able to understand smart money trap a lot more, you should go check out the video on my other channel. is an example of this. This one is a bullish order block. A bullish order block. Let's get out the thing. Bullish order block. This is a demand. We call this a demand. In the demand, we have a proximal line. Proximal line is right here. And we also have the distal line, which is at the end of the order block. And we have the equilibrium price, which is the premium price, the price that these institutions like, as it able for them to be able to get the best possible price for them to use to be able to fund their desired positions. Then the next one, what do you think is going to be? A bearish order block. Bearish order block, we have a distal line, we have a proximal line, same thing. And here I put the equilibrium at the second entry. This is our first entry. Market did, broke structure, came back, equilibrium tap here, potentially look to be able to take, to be able to break maybe these highs, these lows and these lows. Okay, now that is what an order block is. That is what an order block is. Now in order to be, now we understand what makes an order block valid, what makes an order block invalid, and what makes it more high probability, the high probability one. And now we understand why market may drift towards that supply of demand. And now we simply understand the fundamental reasons behind the order block. We understand order blocks are footprints left by institutions. Okay, now we're going to go into the trade breakdown of GBP JPY. Boom. Understand. Now we're going to go into trade breakdown. Always at every single point, straight away go to what I call the higher time frame, the power of higher time frame. Go into the higher time frame. On the higher time frame, you see that we tapped into what I call a order block on the higher time frame. Now this order block on the higher time frame is highly probable. Why? Because we have the engulfing candle, a major bullish pressure. If you check on the monthly, it's broken structure, gets multiple lows, major pressure, and market tapped in towards it. When the market tapped in, it gave us initial reaction. Okay, I was looking at this, okay, that's good. Potentially we can look to get a trade. Market tapped in initially, and we understand change of character. Market came back in, induced a high, and then gave us a real change of character, not the fake ones. The market tapped into this order block again and created a liquidity point. Now, this liquidity point was an area of double highs. 1 tap, 2 tap, 3 tap, 4 tap. Now I'm looking at this as an area of equal highs, as what I've said. Market looks to be able to induce retail traders in order to be able to use their liquidity to be able to fund their desires. Right here, we had the inducement of that liquidity. Right, market pushed down and broke structure, confirmed to us that now potentially we are in now a seller's market, not a bearish market, not a bullish market as it had been for major days. As you can see, the structure has been major bearish. Now I'm looking to be able to look to take sales. Now you see the inducement push past. Now retail traders are buying at this position, potentially buying at this position. Market using liquidity to sell the market, and it broke structure. Market tapped in. As soon as market tapped in, I was looking at that as an area of opportunity. I was patiently waiting. As you can see, market came down and did exactly what I said. It broke structure. If it does not break structure, I am not taking it. Look right here, it broke structure. If I go down to the low time frame, right here, or if even so, here, broke structure, and market tapped in. And what I was looking to take, I was looking, as I said, lately on GBP/USD, I was looking to be able to take towards looking to be able to take profits at liquidity, not looking to take towards these major points, simply towards just liquidity in and out. Simple. What I was looking for liquidity right here. I saw this Asian low that was unmitigated, and that's why I set my first entry. When my first entry came, and then essentially when I saw I was throwing as a profit, I saw a re-entry potential. Go down to the lower time frame, you can see that we broke structure right here. You can see that we broke structure right here. Market came down, broke structure, and left this order block right here. This order block is very high probability. Why? Can be a major pressure. It broke structure, one of our rules. Now, if it breaks structure, we have to take it. Was it as well as it has to? If it breaks structure, to break structure, as also major pressure, that means as well as an engulfing candle. Market tapped in, market patiently waited, and then market came down. I induced our first and induced this Asian liquidity. Now I was looking to be able to take this re-entry. Why? Because there was Asian liquidity right there. This what makes us, and now makes us more of a high probability setup. Market came in, patience, tap, major liquidity, and tap, took partials at this, took partials here. I was looking to be able to take it this Asian liquidity, however it did not hit. However, I did take many partials along this course. It missed it by pips. However, I did, because of this consolidation, I took majority of my position and I let around 10% run, 5% run. I left 6% to run towards this low. However, it missed literally by pips. And that's as simple as it is. Order blocks are not something that is simply fundamentally hard. Simplistic people try to be able to use big words, try to be able to force upon language and techniques onto this order block when it's as simple as this. Simple as this. We see the break structure, we see the major pressure, we see the engulfing candle, clean price action, no choppy price action, liquidity, premium pricing, and what happened? Market tapped in, and then you just got to be able to take it with hesitation. And then just like that, market tapped in, juice liquidity, and that's how we call a one. Wow, that's how that. You just see the power of order blocks, power of SMC, power of risk to reward. 1, 12, 14, 26, 26 R. We call it 26 R, and that's, ladies and gentlemen, how you be able to master order blocks. As simple as that. You're going to see a lot more content from me. Going to be much more consistent. I'm going to start uploading a bit more right here. Simple as this. I really want you guys to be able to get value and then spread value. There's a lot of things like you see me keep talking about how individuals try to put big words on simplistic stuff and try make things more than what it actually is. It's happened to me, and I just want to make sure that it doesn't happen to you guys. And just be able to provide you guys value as simplistic as possible. However, I know, and that's all. Thank you very much. More knowledge right here. A Google document about everything I just explained. And how I broke down the shade. Thank you guys. Make sure you be able to get this in the comment below. It will be at the top comment. Make sure you guys get it. Make sure you be able to understand it. How to be able to use order blocks in order to be able. I wrote down how I use order blocks in order to be able to use and be able to how I use the order blocks to be able to give me confidence for my GPP, JPY setup. Thank you.